We trying to get paid.
Making money, make it, dollar,
We trying to get paid.
making money,
Make it save and invest. Stacking up checks. Let's go.
We started the morning with a sell-off, but ended with trillions of dollars in more wealth being created for investors. The S&P 500 is on pace for 10 straight weeks of gains without a losing week. QQQ, 19 out of 24 weeks green. Hello, everyone. It's your host, Lasali Nungu. Make sure you press the like button on this video right now. Let's talk about today's market action. We started this morning with a pullback. It was actually quite simple. The leaders of the pack, Apple and Tesla, started to sell off aggressively. They opened up a bit far away from the 20 moving average on those shorter time frames. And what happens when that happens? You must sell back down to the 20 moving average. That is a very well-known fact across technical trading. Today was a very, very interesting day. Tesla is now down $55 a share since its high just a few days ago. And after hours, it looks to be down another $8. Remember, the stock split was supposed to send it to Pluto. Now, this is very interesting because I have a difference of opinion there. I believe this stock split has actually invited more weak hands into Tesla. People who don't know what they're doing, people who are simply trading on hype and who are now selling the stock based on the fact that they're losing $10 here, $20 here. These people are not professional investors. They're fear mongers. They're weak hands, and they're going to be people who are going to unfortunately have to be driven out of the stock, right? Pushed out of the stock until Tesla can rebound the way it's supposed to. Every sector of the market was up today besides energy. Exxon is paying the price. I think you need to watch it, though. That's why I'm going to bring it to you when I see something really happening there. But Sal, I'm so excited about what you're saying. Is it too late? Is it too late to participate in all the money being created right now? And I want to tell you something. No, it's not. It's not too late. But we've got to be honest about the fact that the stock market is overbought on the daily time frame. So what you're going to have to do is play very close to the action. You're going to have to play on a shorter time frame. I always suggest 1 hour. Pull up a 1 hour chart of, let's say, UPRO, a very inexpensive way to play the S&P 500, UPRO. Why UPRO, Sal? Well, simple. The S&P 500 is up 9% over the last 30 days. UPRO's up 30%. Why? It's a 3x leveraged product. You get 3 times the gains without the necessary leverage of margin. All right? Now, just because the stock is overbought doesn't mean it can't keep going up. Right? We're learning that lesson right now across the board, across the market. So you're not late to the game. You pull up that 1 hour chart, you put up that 10-25 moving average that I always suggest people use, right? And then what you do is every time the stock crosses above the 10 and 25 moving average, you're going to buy. And every time it crosses below that, you're going to sell. All right? You cannot predict the future. I cannot predict the future. So we don't know how long the trend is going to continue. And I'm more than happy. In fact, I suggest that you back test my system with any stock. And you tell me any trading strategy besides a crossover moving average strategy that can get a beginner into trading, not next week, not 45 days from now, but right now. Are you going to have some losing trades? Absolutely. There's some fakes in there. You're going to get some fake outs. But for the most part, you will see incredible gains in your account by trading that strategy. I wish you had started 3 months ago. I wish you had started 6 months ago, because you'd be far richer, wealthier, whichever word you want to use, if you had started trading when we were at the bottom. That's why we're playing the long game when we talk about trading and investing. It's not about 1 month or 1 week. It's how have you been doing over X amount of time, preferably more than 5 to 10 years. That's where you know, okay, wow, I'm really playing to win, as I've mentioned several times on my podcast. Those of you guys who know me, you know I love leverage ETFs. I love those things. I mean, they're liquid. They make great money. They're easy to trade. You don't have to worry about picking the right option at the right strike. I mean, you ask me today how to get into day trading, I'm going to push you into stocks, preferably leverage stocks. Why? Because I know you're going to lose money. And I'd rather you lose $3 a share than 50% of your position if you were to trade options. Because if you lose 50% of your position, guess who you're going to come back and blame? Guess who you're going to stop watching? I know you're going to lose. You're a beginner. That's what beginners do. They lose. My Instagram, I don't talk about options on Instagram. Hell no. There are no professionals, traders on Instagram. Those are beginners. And at the beginners, we're going to talk about UPRO. Again, the smartest way to trade the S&P 500. If you want high return, relatively low risk. If you want to get more concentrated, then you can go with UDOW. I mean, that's, the Dow Industrials. And then we'll talk JNUG, which is the junior gold miners. That's looking real nice right now. Give it a bit of time, right? Give it a bit of time. Gold is having its issues. I'll talk about that later. Big drop in crude today, by the way, down $2 a share. I mentioned XOM earlier. All the major oil companies are paying a price right now. The decline really continues. And by the way, if you want to take advantage of that, you buy DRIP, D-R-I-P. That is an inverse ETF. That is a great way to play the decline in oil and gas right now. Honeywell, up $9 a share since I mentioned it. $4.50 today alone. I bought it several days ago, and today did let go of my position. I have a feeling I'm going to end up regretting that. But hey, you don't have all the money in the world. That's the trader's dilemma. You only have a limited amount of capital, and you've got to move it around as you see fit. But Honeywell is an international play that's going to eventually break out of its all-time high of 183. I mean, it's a very exciting global play in the same vein as a Caterpillar, CAT, or Pittsburgh Paint and Glass, a PPG. All right. Some people took offense to my comment yesterday about Zoom. Zoom sold off today, but it's very clear that the market agreed with me. Zoom down $34 today, nearly 10% of its value. Let me tell you something. Companies with real products that have a moat, they don't decline 10% in one day. Yes, earnings were very impressive. But if the gain was real, if investors really valued Zoom the way they bought it after earnings, then why did it decline 10%? It's because you've got a group of investors out there who honestly believe that it's a one-trick pony. Again, time will tell. Pull up Kodak, K-O-D-K, for examples. Huge day for Facebook, another 2%. That's 19.2% for Facebook in the last 30 days alone. It's less than $200 billion away from $1 trillion market cap. It's coming, folks. It's coming. And you heard it here first. NVIDIA up, up, up. Another day of profit for investors. Pull up the weekly chart, and it literally looks like a missile going straight to the stars. I'm very excited about emerging markets as well. You can use the ETF EEM. You can go leverage with EET. EET up 30%. Up 30% in the last 3 months. EDC up 57% in 3 months from the lows. Both of those ETFs, all three of those, actually have delivered solid returns and could very well keep going if they break out of some of these, short-term highs you'll see in the chart if you pull those up. But I'm very excited about what I think could be a breakout coming in emerging markets, because it's very clear, guys, we can keep going up, but the volatility will start to become a little bit more frequent here. It's going to start becoming more frequent here. Today, feels like a warning shot. Today felt like a warning shot. Now, I know the Fed is there. I mentioned that several times. They're in there buying stocks, and I think they participated very strongly today, right? Because for all intents purposes, the market was selling off today until about 12 o'clock. And if you pull up the SPY at 12 o'clock, 11:55, 11:56, something just was like, you know what? This market is going up today. And it just shot straight out of a cannon. I mean, the DIA and the SPY was on fire since 12 o'clock. Did you see Peloton and RRGB today? Come on, man. Ticker URE, real estate ETF. Nice day. 4% today. Real estate's still struggling, but I'm watching it. I'll continue to stay on top of real estate stocks and let you know if things become more interesting. Silver and gold continue to be a huge letdown for the last 2 weeks. I'm very upset about what's going on in the shiny metals. I can't hide it anymore. It's very frustrating because these stocks should be way higher than they are right now. JNUG, NUGT, GDX, considering the risk outstanding. I mean, global markets are more at risk now than they were at the height of the pandemic. Asset valuations are going to be seriously tested in 2021. Gold and silver should be responding to that right now. All this money printing, all of this forced inflation being created that they say themselves they're going to be creating. Gold and silver, where is the response? Time will tell if it shows up. It's your boy Sal. Until next time, tomorrow is another trading day. Trade well.